Buying a house is generally the biggest purchase in one's life. This takes me back to when I was 26 years old and I bought my first house. I was working 2 jobs. At the time, I was able to qualify for a 35-year mortgage with only 5% down. I knew that I always wanted to live in the same city. I also always remember my dad saying, "Don't wait to buy real estate and wait." So for me, this decision made sense. I knew that I wanted a house for myself and my future family. Mortgage debt is generally considered good debt as real estate prices often increase over time. Still, one has to be prepared that if prices go down for a short period of time or even for a long period of time and potentially down below cost, depending on the area that it's located in. As with any investment, there's always a risk that it could go down to zero. In my opinion, it's best to play it safe and prepare your budget to handle any type of huge loss if you decide to purchase a home by getting a mortgage. You can see that the majority of people over a long period of time in Toronto real estate have made a significant amount of money. I'm not saying that this trend is always going to continue. I'm just showing you an example. Purchasing a home is a personal choice and it depends on a person's lifestyle. If a person knows that they want to move around, then purchasing a home might not be the best choice for them. If you do want to purchase a home, it's best that you go to a reputable bank or mortgage broker and find out how much you qualify for. Royal Bank states that no more than 30 to 32% of your gross annual income should go to mortgage expenses such as principal, interest, property taxes, heating costs, and condo fees. Let's take a look at an example of a $400,000 mortgage at a 30-year term with a 6% interest rate. The payments would then be $2,379 a month. Again, we have $2,379 for the mortgage payment. These are just monthly expense estimates. $350 for the property tax, $150 for home insurance, utilities $600, and homeowners association fees $50. The total then works out to be $3,529. So when we use the RBC ratio to have a maximum of 32% for debt services, we take 3,529 and cross multiply and divide with 100% and 32%, and then we get $11,028 that we need in gross monthly household income in order to qualify. To figure out how to calculate that being a yearly salary, we times that by 12 months in a year. So household income would need to be $132,336 a year to qualify for this mortgage. It's a good idea to try to not push your budget, for you don't want to become house poor, meaning that so much money is going into housing that your budget is then extremely restricted. Once you figure out how much you qualify for and what works best for you and your budget, you can then begin the house hunting process. Just because you qualify for a certain amount doesn't mean you need to max out and spend that certain amount. Make sure that with your budget that the numbers work for you and that you have a lot of wiggle room in case interest rates go up or in case unexpected expenses occur. A single-family detached home can have a lot of advantages. Quite often there are no condo fees, but this is not always the case, so you want to check with a realtor and with a lawyer. Often you are able to follow your own rules and not have to follow the condo board rules as long as they are within the law. It may also appreciate more in price. This is not always the case, but in some areas, single-family detached homes have appreciated more than other types of properties. And generally, you don't have to ask for a parking pass for visitors. Usually, visitors can park on the street for free or on your driveway. And always, 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 no matter what property you purchase, get a home inspection before you purchase it. There are many things to consider that can affect the resale value of the home as well as your overall comfort. Is it near a busy road? Is it on or near contaminated land? Is it near a compost recycle facility? Is it near power lines? Is it near a railway track? Is there a homeowners association fee? And if so, how much is it? Are there condo fees for a house? Yes, some homes have condo fees. This listing right here shows that this home has a starting condo fee of $100 a month that covers ground maintenance. However, this price of $100 a month is likely to increase over time. There are many houses located in this area that also have condo fees that have been listed for many days on market. For me personally, I wouldn't even consider purchasing a home that has a condo fee. You also want to check if it's in an area that is not able to be insured, such as an area that is prone to flooding. Check with an insurance company to see that you can get insurance for the property before you purchase it, and take your time to think about it. This generally is the biggest decision that people make financially in their lives. It's very important to have a reputable lawyer gather and review all documents. If you purchase a condo, you want for experts to check to see how the condo board financials are. And you want a home inspector to inspect everything, including the whole building. To be honest, condo purchases kind of scare me. I've heard of many stories in which people have lost all of their money after purchasing a condo that ended up having structural issues or that they were deemed not safe to live in, and yet they still had to pay off their mortgage or claim bankruptcy. Also, a condo board can issue a special levy for repairs needed. This means that condo owners would have to pay additional costs that could cost thousands of dollars. Recently, it was reported that a condo building in Miami needed $46 million in repairs, so this worked out to be $175,000 for each condo owner. You can probably tell that in my opinion, I feel a single-family detached house is generally a safer investment and it gives you more control. But I know that everyone's situation is different and not everyone can afford to purchase a single-family detached house. Everyone needs to make the best decision for themselves. Just know that any real estate deal is a huge decision that can have a major impact on your cash flow and your net worth. And you should always work with a reputable lawyer and a home inspector. There are different types of mortgages with different rates. It's interesting to see what rates were last year. In Canada, we generally can get up to a 5-year term, whereas in the United States, it's very common to get up to a 30-year mortgage term. When the Bank of Canada or the Federal Reserve in the United States either raises or lowers rates, this then usually affects what the bank prime rate is. So if someone has a variable rate mortgage, their rate will likely increase or decrease during their term. When somebody has a fixed rate mortgage, their rate will stay the same for that term. So a 5-year fixed close rate with TD is now at 6.19%, whereas a 5-year variable closed rate is at 6.95%. You can always shop around for different interest rates as it makes a huge difference towards your monthly payments, but always go with a reputable bank or mortgage broker. I like to use a mortgage calculator and choose different rates so that I can see how it will affect my budget. Fortunately, I have a perfect 900 credit score. This allows me to qualify for the lowest interest rates. You can watch my video for how to increase your credit score, which is located on my channel page. If you click on Create Personalized Report, this shows you even more details about your mortgage, including an amortization graph representing the whole 30 years. You can see that each year is broken down into payments made, interest paid, as well as principal paid. As you scroll down, you can see that the interest paid is decreasing, while the principal paid is increasing. When you go all the way down to the bottom, you can see that your total payments on a $400,000 mortgage is $902,000. That means you're paying $500,000 in interest over the 30 years for only borrowing $400,000. That's a huge amount of money, which means that it would be great to pay down your debt as soon as you can so that interest paid becomes even less. Now, the best part about this page is seeing the number 0, as that means your mortgage at the very end of the term is all paid off. Every dollar paying down the principal of the mortgage is a dollar closer towards your financial goals. Actually, it's a lot more than $1. When I click on lump sum payment and type in $365 a year for an extra $1 a day, we'll make that annually. You can see that I'll now pay off the mortgage 1 year and 1 month faster. Let's see how much money I'll save. Total payments for the mortgage made is $902,000. The total interest for the 30-year mortgage is $502,000. If you make an extra $365 a year payment, then the total payments made comes down to about $880,000. The total interest then becomes about $480,000. So the difference saved is that you're making $22,000 less for your total payments, plus you're paying less than $22,000 in interest that you would have had to have paid. So you're paying off your mortgage 1 year, 1 month faster and saving a lot of money. When you think about money in this way, it'll help you make choices in the present and to save your money for the future. Any dollar that you spend now, you could save instead, and you could save more than $2 off your mortgage interest if you put it towards your mortgage payments. Should I spend $5 on this coffee? Or should I make this coffee at home and put $3 towards my mortgage? Should I spend $2,700 for a new garage epoxy floor, or should I put that money towards the mortgage? Recently, I was so tempted to get my garage floor re-epoxied. Sometime in the future, I can get that new epoxy floor. It would be great to have now, but it feels even greater to pay off the mortgage sooner. It's such a huge accomplishment to pay off your mortgage and to be completely debt-free. Once this happens, you should plan a celebration to acknowledge all of the hard work you put into becoming debt-free. This is not about becoming rich quick. This is about making years and years of good choices so that you can be mortgage and debt-free and have a safe financial future for you and your family. Out of my 150 videos, the one that YouTube thinks that you would like to watch best is up on the screen right now. I'm now at 382 subscribers. Thank you to everybody for your support. If you could please subscribe to my channel, I would truly appreciate it. Save money, make good choices, and please be kind.